So the Fed have just come out and announced what they're going to be doing in the markets, and the market has reacted very positively. We got Bitcoin pumping up 5.5% now, touching the $40,000 mark as we speak. We got Fantom up almost 12% today after Jerome Powell started speaking. In this video, I'm going to break down exactly what was said, what implications this will have on the market. We'll look at some of our favorite coins and the key levels and break down exactly what was said by Jerome Powell and why the market is so buoyant and whether this can last. Make sure you hit up the like button. Don't forget to subscribe. As always, if you like my perspective, consider checking out the links below to join our course member live streams, ijaz.uk/member. Right, guys, without further ado, let's get straight into the charts, because you can see straight away this is what we've got to deal with. We've got Fantom pumping up almost 12%, now at 84 cents. It feels like a long time ago we were sat at about 65 cents in the bottom here when I was buying and couldn't help myself. And now we're back at an important level at 84. If Fantom can hold 84, that's going to be a true feather in its cap for it to start heading back towards 96 on its important recovery here from some of its lows. We've got Bitcoin up 5.9% here, breaking out from its wedge pattern, which we've been monitoring earlier in the day today. This is a nice breakout. You can see here the violet descending wedge which we've got. This is now a clear breakout. We started breaking out earlier in the day. We consolidated as the market was nervy leading up to the FOMC meeting, and then a breakout. What is causing this? S&P up 2% at session highs, and now this is why Jerome Powell came out and announced a 50 basis point interest rate hike. Yes, a double rate hike. The first one since I think like 2002, 2003, whenever it was. Many years we've not seen a double rate hike. But then why is the market rallying? Well, we monitored this in the videos in the lead up to this event, that the market had 100% priced in a 0.5% interest rate hike. The 50 basis point was already priced in, and that was not alone going to spook the market. So that was the first tick in the box. The market was happy about that, and you can monitor it. I mean, I'll show you how we were doing a live stream, right? And we had this chart open. We had the S&P open on the right on the minute candles, and on the left-hand side, we had Bitcoin open. Let me share my screen with you. Give me a second. There we go. So on the left-hand side, we had Bitcoin, and on the right-hand side, we had S&P. And you can see on the left-hand side, the first red dotted line is when the statement came out. And in the statement, he said 50 basis point increase in interest rates and 45 billion per month in balance sheet reduction starting from the 1st of June. So again, this is very good. If he did closer to 95 billion, it would have rug pulled the market. If he did less than 45, it could have led to an even more rally, but 45 is good. The market will take that. So initially we saw that the market was just holding up pretty nicely. No issues, just held up pretty nicely. These are minute candles, by the way, so these aren't big moves whatsoever. And then Jerome Powell spoke on this second dotted line, and you just saw here, it started falling because he started by addressing the American people. And the first thing Jerome Powell said was, and he looked directly and he said to the American people, he weren't talking to investors, he said inflation is still very much too high and the labor market is still very tight. He wanted to address that to the people, because at the end of the day, the Fed has a duty to the people of America, right? They're not here for investors like you and I. They couldn't care about me here in London with some crypto and maybe some stocks, right? They don't care. Their duty is to the people who are suffering with a tight labor market, who are suffering with inflation much too high, affecting their daily purchase. So it's interesting that he pointed that out. We'll come back to that in a second as well. But then there was another critical piece of data that he mentioned, and it was a great question by, I can't remember who asked it, but it was a great question, and that is what led to this big move. And that is when he was asked, is a 75 basis point or 1%, 1% interest rate hike possible? And to that, Jerome Powell said the keywords which got the market rallying. He said he is not actively considering 75 basis point hike, and the market loved that, because remember, the market can handle 0.5%. okay, the market priced that in and it wasn't too an issue, and even the market has accepted that maybe the next few meetings will be 0.5, because remember, Jerome Powell says he wants to front load the interest rate hikes till we get to neutral. Remember, neutral is about 2 to 2.5% interest rates. So Jerome Powell reiterated that again. He says he's going to raise 50, and 50 will continue to be on the table for at least the next handful of meetings. So very possible that 0.5, 0.5, 0.5 could be the pattern of the next couple of meetings. And I think the market is going to price that in and be okay with that. What was reassuring was that he wasn't even considering a 75 basis point interest rate hike. 50 is enough for him right now. He just wants more data. Now, coming on to data, he made another point very clear, and he said that 1 month's reading is not enough. It's not not a case of us getting an inflection point on the next CPI read, which, by the way, is on May the 11th. So that's the next date for our calendar in 7 days from now. That's next Wednesday. It's not just enough for that one CPI reading to inflect down. He needs clear evidence. These were his words. He needs clear evidence that inflation is moving in a direction that gives him comfort that inflation is under control, okay? That is his job, and ultimately he needs to see that inflecting down over multiple readings. And if and when that eventually happens, he's not saying that he's just going to switch everything off. He's just going to taper it back down. He'll go from 50 basis points to 25 basis points, right? And then eventually reduce that down. So, okay, we've got a clear roadmap around that. I think overall the market feels confident that Jerome Powell has this under control. He said there is no evidence of wage price spiral, which is very good. And then he covered off the issue around the Ukraine and Russia, right? He says it affects the headline inflation rate. It does. He says it can prevent the supply chain element of inflation from healing. He thought that was already healing, right? He thought it was transitory and it was starting to heal, but he's saying the Ukraine and Russia issue can weigh in on that healing and thus start to affect the broader inflation figure. So that's what he thinks around the Ukraine, Russia, and some of the China elements as well in terms of their lockdowns around COVID. He also said, when asked, look, because this is an important point, the Fed can only ever focus on the demand side of inflation. They can't affect the supply chain. And we know that a lot of this inflation is supply chain focused. There's been bottlenecks in ports and supply chains. Companies have made that very clear. So what is he doing tackling it from the demand side? Well, he said, no, there is plenty that needs to be done on the demand side. There continues to be excess demand as evident by the labor market, which is still in imbalance. And he wants to restore that. Now, the next point he made was another one which got the markets feeling confident. He says we can restore price stability without a recession. In other words, he's not given up hope of a soft landing. He was then actually asked directly if him and the FOMC would ever purposefully endure a recession in order to meet the inflation target if needed, if there was no other option. And to that, he actually, in fairness, said to him that he wouldn't hesitate to do so. And he continued to praise Paul Volcker, who famously did that, right? He drove America into recession to bring inflation down. So it sounds like that is something that if he was backed into a corner to do, he understands that his duty is to the people. That's his obligation as the chairman of the Fed, of the FOMC and of the Fed, to curb inflation. So he, in other words, says yes, he would be happy to do that. And that makes sense, right? Investors have heard this before. That shouldn't spook any serious investor who understands that he does not work for us in these charts. He works for the lay person. So overall, really nice moment in the market today. Bitcoin continues to be up 5.6%, getting a little bit of resistance here at the 40,000 mark as we expect. If I come on back over to the Bitcoin chart, our level really we need to get to is 42.5, which brings you to the top of the wedge. Right, that's about where my cursor is right now. This is 42.5. Now, naturally, you're going to get some resistance around 40,000, key psychological level. Then you'll get some resistance around here, which is just above 40,000. And then you've got some resistance at 41,659. But as long as we can keep some momentum now and have a couple of good weeks, we can quickly get ourselves back to 42.5. And then what I want to see is, can we start getting back to 44.5? Because 44.5 then takes you back, if I can zoom out back to the 4-hourly chart, to this from our white wedge. Remember, this violet wedge was breaking down from the bigger white wedge. The neckline of this white wedge is at 44.5. So 42.5 and then 44.5 are the levels I'm looking at here on Bitcoin. Now, let's also take a look at Fantom, because as we said, Fantom had a really good 12% up today. Now sitting at 84 cents. This 84 cents level is really important. You can see that's an important level here for us. But more importantly, we got to get back to 96. Got it over the next couple of days. If Bitcoin can sustain a few green days, you can pretty much see that people are ready to buy the dip on Fantom, because some of these coins are super undervalued. We're going to flick through them right now. But if we can get back to 96, that's going to be the key level to hold and start working our way back up here on Bitcoin. A few other noteworthy mentions. You got ADA up 12%, now sitting at 86 cents here on ADA. Big move to the upside here on the 4-hourly chart here for Cardano. If we look at Solana, you're up 6.6% on Solana. You got 20%, almost 18% here on Rune, moving nicely after the Fed discussion here. Nice big move here on Rune. ApeCoin up 15%. Not something I'm personally chasing, but up 15% for those who are interested after its big move up and big move down. People are looking to buy the dip. Avalanche, more importantly for me, is up 12%. Again, showing that people are ready to buy the dip, right? They were waiting for this meeting and they're buying with the cash that they had sat on the sidelines. Now, I want to stop on a cautionary tale. We can keep going. We've got Luna up 5.7% as well. You've got Dot up 9%. You've got Matic up 8%. You've got Link up 8%. So some solid projects up. You've got Coty up 12%. Obviously, they had their JED mainnet launch today, I believe, as well. So a good day overall in the market. And maybe this could be the sign of us getting some momentum and really starting to move the upside. But a caution, a cautionary note, because we've seen this before. Right? On March the 16th, when we had our first interest rate hike, Jerome Powell spoke very eloquently and he didn't crash the markets. He spoke very well. He said exactly what we wanted to hear. And we thought, hang on a second, we're going to be good to go. But then what happened? What changed? In fact, let's pull up the charts. What changed? Let's go. I'm going to go into Bitcoin. I'm going to click on the daily chart. What changed? Does anybody know? Because the reality is, when Jerome Powell spoke, on the March the 16th, and he did his first interest rate hike, that was right here, guys. That was right here. Now look at the move to the upside. Big move to 48,000. And then a big move all the way down into our descending wedge where we find ourselves to this date. And what changed here? What changed was Jerome Powell U-turned. Jerome Powell and his Fed officials did a bunch of media appearances and they U-turned. And whatever data they got, whatever new insights they got, they suddenly changed their mind from what they discussed at March the 16th. And that is what the market couldn't understand, is that 2 weeks later, after your Fed meeting, where you pretty much told us it looks like we're going to have 0.25, 0.25, 0.25, you came out and said, no, I want to front load. I want to do a bunch of 0.5s. And the market priced it in, rightly so. And that's why we're not panicking right now. We can rally some of that back because that's what the market does. It'll price in the worst. And then when you get better news, it can rally thereafter. It's always easier to rally than to price in, right? That's why we got this. That's why we priced this in. This is the market saying, okay, we're going to price in the fact that Jerome Powell wants to get to 2.5 quickly. He wants to go 0.5 hikes. Okay, so it priced it in. So now we need to be careful. We need to be careful because yes, today was good. The meeting was good. The market is rallying. Let's just make sure no more Fed officials are coming onto the media. No more press appearances by Jerome Powell where he suddenly changes his mind and says, oh, hang on a second, 0.75 is now needed. Or after the CPI reading next week, which is on the 11th, if that comes in high again, then Jerome Powell comes out in the media and says, maybe we do need a 1% increase. Maybe we do need 75 basis points. Maybe we do need to shrink the balance sheet a little bit quicker, right? So we need to be cognizant. But given none of that, the market should have permission to start moving to the upside. Yes, we still have some macro uncertainty. Yes, we still have the Russia-Ukraine issue. Yes, we do have a bit of a slowdown being seen in China. Yes, we did have a slowdown in US GDP, but we can work our way through this. The economy is still in a accommodative situation. We're still less than 2.5%, and we're going to be there until at least the end of the year. So the market should get over it and start moving to the upside. More importantly, it looks like Jerome Powell has this under control, and as long as he is seeming like he has this under control, the market will start to have confidence in him and markets can start to put their positions back on the assets that they want to ride for the rest of this year. As always, guys, if you appreciate this blend between technicals and fundamentals here and coverage of the FOMC meeting, make sure you smash up the likes and subscribe. Don't forget, if you like my perspective, consider checking out our members-only course member live streams. That's ijaz.uk/members, where we go through tokenomics, we go through technical analysis, we go through macroeconomics, we look at your portfolio, we critique it, and we talk about a whole bunch of other things in 3 times weekly live streams, just with members in a small, nice little group where we can discuss things in real time and make decisions in real time. As always, guys, don't forget to smash the likes, don't forget to subscribe, and I'll see you in the next one.